At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought.
And welcome to the Author Brand Show. I'm your host, Doug Crow. We're going to want to take notes today. I got some great information from you, not from me, but from our guests, of course. And if you don't take notes, you can, below here, you can see, you can actually download those notes yourself and get a hold of our guest, because, man, he is a co-founder of a company called Takeoff Capital. It's a real estate private equity firm. And through their company, they help smaller investors, such as myself or him, passively invest in larger scale apartment projects that typically people don't have access to. So learn more about that. Welcome to our show today, Mr. Mike Tai. How are you, Mike?
Doug, it's an honor to be on your show. You know, just after a year ago, I went through your program. You helped me, write a short ebook, and now I guess life's kind of coming full circle being on your show.
Yeah, now it's time to promote that and help you bring in some more capital, investors, deals, whatever you want to work on. So I'm going to start the show off with something very controversial, but we're going to let it hang for a second, let people think about that. But the words affordable housing in San Diego are very rarely put together in the same sentence. But we're going to talk about that in a few minutes, right? Yes.
Yes.
Okay, great. In the meantime, we'll come back to that. I want to know how you, a former air traffic controller, right? I mean, you got involved in real estate investing. So we shouldn't talk too much about airplanes because that will definitely lengthen the show. But how did you go from, career in civil service to this?
Yeah, I guess if I could say it in under a minute, basically I was working at an air traffic control tower one day. I was actually in Afghanistan. I was working for NATO as a NATO contractor for the time in Kandahar. And one of the air traffic controllers there was telling me how he's buying rental properties and it's giving him cash flow every month. And this concept was completely foreign to me. I was probably 26 years old at the time. Yeah. So that is the initial basically conversation that spawned my interest into real estate investing. When I came back, I started buying properties, and I noticed that it was, grossly outperforming my 401k with my air traffic control job. So I cashed out my 401k, paid the 10% penalty, and started buying larger scale commercial real estate. And the rest is history.
I love that. That is such those two sentences at the end are so critical for people to understand, because we are trained, encouraged, don't touch your retirement money. You'll be paying a 10% penalty on your 401k or your IRA. It's horrible. You're going to lose 10% of your value. But you learned that you could actually make more than that penalty with real estate. For you, is just a math equation, right? I mean,
Absolutely. Yeah.
It's not courageous, honey. It's just math. Okay, get it. All right. So you started looking at that, and then you started investing on what types of properties? Single family homes or small apartments or what?
Yeah, my very first one was I just bought a 3-bedroom condo in Los Angeles, and I lived in one room and basically ran it as a bed and breakfast. I Airbnb the other rooms, and then I kind of grew from there and started buying fourplexes in Cleveland, condos in downtown San Diego that I ran as midterm rentals. And eventually I realized after self-educating more that commercial real estate was truly the path to build wealth. Right. So I pivoted and started partnering with some people, because to buy commercial real estate, you need more money than what I had. So I partnered with other people that I met at my air traffic control job, and we would buy apartment buildings together. And then I realized to go even beyond that, I ran out of money. I need to leverage other people's money. And that's kind of how we started our private equity business.
Nice. So I heard Los Angeles and Cleveland.
Yes.
Ohio.
Yes. Yeah.
That's where I'm from. Okay.
That's where I'm from as well.
I lived in LA for a while, but I lived in Cleveland longer. How did you invest in the those two completely different countries?
Yeah, right. They are essentially different countries. Sometimes parts of Cleveland feel like a third world country. But so do parts of Los Angeles, I guess. I guess because my background is from Cleveland, so I was kind of comfortable with the market and what areas I was looking in. And as you know, it's really cheap. Like, bought a fourplex there for under $200,000. Where in California, my studio costs over $200,000. So yeah, I'm sure you're not too surprised by that. But really, what I had the budget for, and it just seemed like the yield was much higher in Cleveland. So that's why I decided to buy a little bit of real estate there.
Nice. Okay. And so you still have some of that stuff, or has that been sold off? You still own it?
Yeah, I still have 5 units in Cleveland. Yeah.
And how do you manage a apartment building, 5 units, so far away from you? How does that work?
Yeah, I almost think it's easier. Most people, when they buy, they feel like they want it to be a block from their house, because they're like, well, what if something happens? I need to be there. What if there's a roof leak? It's like, are you a roofing contractor? What if the toilet's clogged? Are you a plumber? Do you really want to go there and unclog the toilet? You should be focusing on acquiring the next property and let the specialist focus on these things. So I think it's a disadvantage to have the property right in your backyard because you're going to get too distracted by it. Where if it's in a different state, it forces you to kind of elevate your position and lean on other professionals to do what they do best, and then you can focus on buying and acquiring real estate.
Wise words. So much for that old adage: location, location, location. Still appropriate, but it doesn't mean it has to be your location. I love that.
Absolutely.
Very good. So I want to get to the meat here because when I first met you, I was so shocked with mixing these words in the same sentence: low income housing or affordable housing, however you want to phrase it, and the word San Diego, which is like spiritually pretty high. So tell us exactly how that works, what you guys are doing there, and go from there.
Yeah, it almost seems like an opening line to like a comedy skit.
Right.
Yes. So low income housing in San Diego. Do you want me to get into the controversial aspect of this?
Sure. Yeah. I want to hear it all.
Yeah. I mean, let's talk about rent control. I'll open with that term and then we'll kind of progress on how we got here.
Sure.
So from what I'm seeing as a developer here in San Diego, we build apartment communities here, and bad policy is leading to further decisions in bad policy in California.
Mm-hmm.
And what I mean by that is the NIMBYs, essentially, the wealthy individuals have really only allowed development. They've kind of controlled the politicians to only allow development in really low income neighborhoods. And those neighborhoods are now saturated. And state of California, and even at the city level, has made it really hard to develop any further real estate. Right. So now we have an undersupply of housing. And what happens when there's more demand than supply? Prices go up on whatever that product may be, right? Mm-hmm. So now, prices are out of control due to undersupply issues. And now the next knee-jerk reaction and the bad policy that wants to, possibly be put in place is rent control. Okay, now we got to stop these rents. Let's put caps on how much they can charge in rents.
Yeah.
And now you're scaring away even more real estate investors. They're going to say, screw this. I'm going to go build where Doug lives in the Carolinas because they're more friendly to me. Let's add housing to the Carolinas because California clearly doesn't want it. So it's one bad policy.
Every 5 blocks, there's developments going around down here in Charleston.
Exactly. And I bet, over time, you'll notice in the Carolinas, rent control will be much more, or not rent control, rent growth will be much more stable and appropriate relative to wage growth than in California, where there's such compliance constraints that rent growth is out of control. So really, the bad policy of not allowing developers to develop real estate has led to another bad policy, which might be enacted, of rent control. Yeah. So it's just kind of spiraling out of control. Who knows what's next?
Yeah. One of my friends, Kent Emmons, is big into politics there a little bit. And he had somebody he talked to who actually did the math. It was some billionaire person wanted to help revitalize the economy there, and was offering like a huge chunk of land and buildings to house the homeless, right? So I'm going to do this whole thing, and I'm not going to charge you a dime. It's extra real estate he had, and it would be like really affordable. Like it cost them like $5,000-$10,000 a person to take care of this issue. And they're already spending, as you know, like $100,000 per person per year for nothing. And because of the regulations that you mentioned, like, hey, all these things they wanted to do to constrict his idea, he said, forget it. I can't help you out. I really tried. He really had everything in place to help out. And because of the infrastructure, things that the bureaucracies of getting it done, it was just insurmountable.
Yeah, there's so much red tape and bureaucracy in states like this. And, to San Diego's credit, San Diego has done a much better job. That's how we are able to build more housing. The city of San Diego has made it easier to build housing. They're way ahead of the rest of the state policy-wise. But yeah, as you said, there's so many layers of bureaucracy.
Right. So, but you've got some unusual or some creative ways to help out with that. So, I want to tell us about that. Yeah,
really, it's as far as adding housing, Doug.
Yeah, the affordable housing thing. You talk about going vertical and there's some cool things there with the last project we talked about.
Yeah, I mean, excuse me.
Sure.
So when we develop real estate, the city does require and mandate that we have a certain percentage of the housing be affordable. Mm-hmm. So what you're noticing, there's a term that's circulating through the airways a lot now and on the news: shrinkflation. My bag of Frito-Lays, I'm getting way less Frito-Lay chips in there than I used to. Yeah, well, shrinkflation is hitting housing as well. Huh. Developers, for us to make deals pencil, which pencil just means to make the math work.
Right.
We have to build smaller units. So now the affordable units, instead of getting a 2-bedroom, 2-bath that is maybe, 800, 900 square feet is an appropriate figure, feels pretty
Right.
good. We're getting 2-bedroom, 2-baths that are closer to 650 square feet. So, you're getting a 20% reduction in size to make
Yeah.
the math work. And they're going to be charged about the same rents as the larger ones just because they're newer, washer, dryer, and unit,
Yeah.
air conditioning, things of that nature. So I really, one of the solutions you're seeing is just kind of shrinkflation hitting real estate in
hmm
California.
Yeah. But you're using it to your advantage, right? Because you mentioned how that's actually helping out by creating affordable housing. That yeah, it's
Yes.
smaller, but at least they can afford it. Is that right?
Yes, yeah, and due to, so let's say, I guess an example that comes to mind, we're building 30 units in a coastal community here
hmm
in San Diego, really nice community, and 4 of those units have to be affordable, available to people of the very low income category, and that's determined by taking 50% of the area medium income. So let's say area medium income is 100,000. Only people that make 50% of that 50,000 can qualify for these units,
Okay.
and you're only allowed to charge a set number of rent, which is 30% of their income essentially.
Right.
So basically, in the end, our 2 bedrooms that rent for 4,000 at market rate, the low income units rent for 1,500 right now. So they're getting a very significant discount, over 50%.
Wow. It's the same size unit as the people who can afford more.
Yeah, so they do require your affordable units have to be within 10% of your market rate units in
Okay.
size. So because they don't want developers thinking, oh, I'm just going to make some hotel rooms that the city will that I'll label as my low income units.
Right.
And
Right.
so the city is wise to that, and rightfully so. They're
Yeah.
making you make it within 10% of the square footage.
You want to abuse it. So those are pretty
Yeah.
coveted places, I imagine. Those probably go pre-sell before the shovel goes in the ground, or what?
Yes. Oh, yeah. This is amazing land. You're a walk. You could walk to the beach. You're walking to rest. You're right behind like a Sprouts grocery store and things like that.
hmm
So it is kind of cool for those individuals in that lower income category, where maybe they couldn't afford to go there. Now
Yeah.
they can rent that apartment, and their kids can go to the schools. Better school system, things like that. So I think overall it is a win, and I don't hate that we are forced to do it. I
Yeah.
see the benefit in it, so I'm
Yeah.
happy to do it.
4 out of 30 is not gonna kill you. It still makes the
No,
project math work, right?
for sure.
Is there what kind of restrictions they have? Can a person who's making 50 grand a year, can they rent it out and charge 4 grand or not? They have to live in it.
Oh, you mean can they sublease it?
Yeah. Yeah.
Oh yeah, that's a great question, Doug. I've never thought about that. I don't know if
just
there's
did.
that would be like a smart hack. Like someone rents our unit for 1,500, and then they're like,
Yeah.
I don't want to live here. I'm going to charge someone 4 grand to live in this unit.
Yeah.
Wow, that's a brilliant angle. Hopefully no one's listening. I guess for us it doesn't matter because we're getting the 1,500. That's an interesting angle. I don't know if there's any legislation preventing that.
If there's not legislation preventing that, we got another product we can roll out for people
Yeah,
across
yeah.
the country. We're teaching them to be real estate investors. But you got to make 50 grand or less. You can't be, what is the median income? What do they set there in San Diego for that? It's probably more than 100.
The area median income, the HUD sets that figure. The Housing Urban Development.
hmm
I don't know the exact number offhand, but it is
Yeah.
a 6-figure number
Yeah, I'm guessing it'd be a little over 100. I don't think it'd be
for sure. Yeah, it is.
okay. So so you don't know if there's language for subletting, but that could be a interesting because it's not just you guys. There's other places that are doing zones, right? Improvement zones
Yes.
for this type of thing. That would be an interesting hack if you want to see.
That's going to be the next viral hack. How to or I guess they call it low income housing arbitrage or something like
Yeah, that's a good. I like that. Trademark that one.
that. Yeah, right.
Okay, so you're developing in San Diego, and it's not all units that are affordable, just a small percentage. What other are you looking at other areas of the country besides that, or is that your sweet spot?
We are hyper focused here because we're familiar with the legislation.
Right.
One bill that I see proposed at a state level is if you build what's called accessory dwelling units, which is just kind of it's just another word for apartments, just with a different label. If they look, feel, and smell like an apartment.
Yeah.
This state is going to give you or not require you to pay property taxes. It's a proposal for new housing. So I think this will actually
How
help
long?
developers because now it'll make more deals pencil in low income neighborhoods if we don't have to pay property taxes.
Wait,
Because property taxes are a big piece of the expense.
Yeah, but for how long don't you pay them? Is it like a 3-year, 5-year abatement or what?
I want to say it's either something in that 10 to 15 year range. So it's pretty substantial.
Wow.
So we'll see what happens with that bill. But if that does get approved by the state, that'll be pretty powerful for the state of California in progressing with the real estate
That would
developers.
change your numbers a lot.
Yes, absolutely. It'll make a lot more projects viable that are currently, because I think what catches a lot of people off guard is there's certain parts of San Diego, mostly lower income neighborhoods, they could give us the land for free and it's so expensive to develop that we wouldn't accept it. Because even if they give us for free, we're going to pay $380,000 per unit to build, and they're going to be worth $300,000 when they're built. So it's like, it doesn't matter that you gave us the land for free.
Yeah.
It's just too expensive to build right now.
Wow.
So someone has to subsidize the differential.
Right.
Or it's just not going to happen.
And you also mentioned, we talked earlier that going vertical obviously can add more revenue, more units at a certain point, because most of when California was first developed, it was just spread out, right? No subway, no trains, just all this land. But now that things have compressed there, do you see a lot more? Is there just 3 stories, or do you go beyond 3 stories there?
Yeah, in the coastal area where we're building right now, you're only allowed to go up to 3 stories, 30-foot height limit. But there are other more urban areas that allow you to go basically unlimited. You can build to the moon if you're able to do it. No limitation in certain areas.
Okay, nice. And then, so what's the minimum amount you could develop on there in terms of any property? Is there 50 by 50 or something like that? What's the size lot you could build on?
Oh, the size of the lot?
Yeah.
Really, we like to see at least a 12,000 to 15,000 square foot lot, because it allows us to build out parking.
Right.
We'll go underground with parking sometimes, but we like to build like what's called a podium. So just imagine like an apartment building on stilts, and at the first level at grade is just your parking, so you don't have to go underground, and then 2 levels above that of housing.
Okay.
So really that size lot allows us to build the podium parking structure.
Right. Okay. And is that obviously a little cheaper to have put a car there versus a unit, or even more less expensive because you don't have to build underground, right? It's all
yes, yeah. Digging, as you can imagine, is expensive, and once you start digging in the soil, you might find some things that cost you even more money. So always best not to dig in real estate if you can avoid it.
Yeah. I was so shocked when I moved out to South Carolina, because I spent 20 years in Chicago, from Cleveland to Chicago.
Yeah.
And I was building decks and doing some remodeling, and it's always like 42-inch pylons go in the soil, the foundation here. I'm like, oh no, my house is on a slab. I'm like, slab? Oh, that's right. There's no frost line here.
Oh, jeez.
It took me a while to get used to that.
Yeah.
So it's interesting. All right. So Takeoff Capital, you guys actually are putting together this fund, and the more money you have, then you can do more projects. Are you looking for more deals or more capital, or both? What's your interest?
Honestly, both. We don't do a fund per se. Like, we don't raise a bunch of capital. We do deal by deal. So every time we have an acquisition, we present that specific deal to the investors, so they know exactly what they're getting into. But we don't do a fund. We're always looking for more opportunities when it comes to land here that's worth building on in California. And we're always looking for new investors who want to participate.
Right. How do you normally find your land now when you're doing it? Is it word of mouth, or what?
Honestly, just through brokers. Really, the brokers find the land. What we're really finding the opportunity is buying rundown retail buildings and scraping them and building, a project. We were looking at this piece of land that had an IHOP on it, for example, and the IHOP, the pancake place.
Yeah.
The owner of the land is leasing to the IHOP. So the IHOP tenant, their business is underperforming. They want out of their lease that's about to expire, and now the owner wants out of the land. And we're like, we'd love to buy that land, scrape the IHOP, and we'll build housing there. So credit to the city. They're allowing us to build housing where retail previously was, kind of converting retail lots to housing lots.
If it's apartments, that makes sense. Obviously, a home might be a little bit different zoning for that, but apartments, that works.
So now we're adding 30, 40 apartment units where it was just previously an IHOP with a big parking lot.
Right.
We haven't got that one yet, but
okay. Well,
just an example.
What's your biggest or best success story of doing this?
Yeah, our biggest and best success story in real estate development. We were really excited by the project we were able to land. We closed on a deal in February where we didn't have to buy a retail lot. We were able to buy 2 single-family homes that are on basically 6,500-ish square foot lots right next to each other. And we're going to merge the lots into one plot of land that the city's going to allow us to build a complex on, and we're going to tear down the houses.
Okay.
And these are 2 residential properties, plots of land right next to each other in downtown Pacific Beach, San Diego.
Nice.
So we're really excited to be able to land that prime location, prime real estate. and just the opportunity of two people selling right next door to each other and being
Yeah,
able to merge the lots and build 30 units.
that's rare.
Yeah, really excited by that. So that's gonna be a fun project.
Can you share some numbers on that?
Yeah, so we bought the land for 3.65
Mhm,
mil. We're renting out one of the houses right now while we wait on permits.
mhm.
Excuse me. Permits in California take like 12 to 15 months to obtain. You know, in the
Wow,
Carolinas, it's probably 3 to
90 days.
5 months, I would
Yeah,
guess.
whatever, yeah. Yeah.
So, you know, while we're waiting that 12 to 15 months, we're renting out the units.
Yep.
Um, and then we're going to build. The construction phase is going to cost, it's going to cost us about $10 million to build that.
How many units?
And in 30 units with
30
underground
units?
parking.
Okay.
We do have to go underground on that one.
Yeah.
We'd love to do the podium, but we have that 30-foot height limit, so we can only build 3 stories. So we're like, all right, I guess we have to go
Yeah.
underground. And then in the end, it'll be worth like $24 million. It'll be a $24 million asset.
Nice.
Yeah, so we're
Nice.
excited for that one. And
Very good.
the investment for that one filled in the first day.
Yeah.
We needed $2.9-ish million from investors. We
Mhm.
opened the investment at noon, and by 11 p.m. that day, it was fully subscribed.
Wow.
Yeah,
Congratulations.
yeah.
That's
So that
great.
was a lot
What
of excitement behind that one.
what's the anticipated IRR on that?
Yeah, you know, as I'm saying all this, I'm not sure how much I'm legally allowed to say,
Okay, that's fine.
just
Yeah,
due
no
to
big deal.
the SEC
It'll be
laws.
good.
I don't want to cop out of responding on that, but there are SEC laws around these things, and
You're
I don't
right.
want to get in
I
trouble.
apologize. Okay. It'll be good,
Yeah,
folks. It gets subscribed in 12 hours. You can imagine. It's like, okay, this is going to be a good deal.
yeah,
Yeah,
absolutely.
that's great. Oh, you mentioned the numbers in terms of acquisition costs and development costs, so they can guess on that if they have some.
We're back on it.
Okay, great. Any clunkers, any bad deals you did that you want to talk about?
Yeah, my worst deal,
Mhm.
you know, every year I kind of look at my portfolio and kind
Right.
of see what, and even my personal investment portfolio, and
Hmm.
see how everything's performing. And I do have an Airbnb house I purchased.
Yeah.
I did a 1031 exchange into it.
Uh-huh.
So I guess, you know, 1031 exchange, for those who don't know, it allows you to tax defer your capital gains essentially.
Right.
But it also puts you on a strict timeline. You have to move quick,
Yep.
which basically forces you to identify a project and purchase it.
Right. It's like, is
That
it still
project
like
is
45 days or so? What's
underperformed.
the timeline for it now?
You have like it's a 6-month process.
Yeah.
I think you have 45 days to identify 3 properties, and you
Yeah.
have to close on one of those 3 you identify.
Right.
So basically, you have to provide the vendor 3 properties that you're
Yeah.
interested in, and then you have to close on one of those 3.
Right. If you don't,
Which
you lose your tax deferred status. You get taxed on whatever you sold.
exactly.
Yeah.
So you
Bad.
can still get out of it and say, you know what, I don't like any of these properties. I'll just pay the taxes
Right.
if
Right.
you want.
Okay.
Yeah. So I bought a property that's not doing as hot as I would hope.
Hmm.
So yeah, I think that's one of my biggest recent blunders
Yeah.
was that acquisition. It's just a single family home Airbnb.
Right. Yeah. Well,
Yeah.
it's so funny. I had Rob Kiyosaki on my radio show years ago,
Oh
and I
wow.
asked him the same questions about best deals and worst deals. And I asked him about the clunker deals. He said, "Oh, I had never lost money in real estate." I'm like, "Really?" He goes, "Never." I'm like, "Okay." And
Oh, he's
I
not
don't know.
joking.
Pardon me?
He's not. I thought you were going to say he was being sarcastic. He was being serious.
No, he's being serious.
Oh, I
And
find that hard to believe. But what do I know about Robert?
I don't know. I didn't challenge him on it because I was, the radio host, and he's the guy. But 2 thoughts came to mind, or 3 thoughts came to mind. I was like, okay, well, you never lost money. Maybe you're not, pushing the envelope enough, being super conservative, or something else. I don't know. But it's
Yeah, I
good.
guess if you're just buying all your properties all cash, it's really hard to fail if you're doing that. If you're not taking on leverage.
Yeah, no, he's not that kind of. I don't think he's doing that. I
Yeah,
don't know.
he
I think
really promotes leverage in his book.
right. I think most of his money, actually, from what I understand, it comes from the teaching, not from the doing. But
That's a good point.
very, very common. All right.
Yeah.
So your private equity on a deal by deal basis, I love that. That makes it much easier for people to look at something versus to having to scrutinize the whole package. They can just look at this deal and say yes or no. Do you always
Absolutely.
have that set up ahead of time, the package to promote to them, or do you sometimes say, I got something coming? How much information they have before they commit to you?
Yeah, so once we get a property under contract, we do a marketing video. We've started out like kind of like a hype video. It's us at the property, and then overhead aerial footage. So they can kind of get a feel for the
Yeah.
neighborhood, local restaurants. Kind of really
Mhm.
tells you a lot about demographics.
Right.
You know, is there a Chipotle, a Panera Bread within walking
Yeah.
distance? Those kind of businesses.
Mhm.
So we start with the marketing video, and then we create a pitch deck. or an offering memorandum, it's also called. And we hold a live webinar where we present the offering memorandum, and then we take questions at the end, a live Q&A in front of everybody, getting, whatever they want to call us out on, it's fine. We're there to answer it. And for those who couldn't attend the webinar, we send them a recording of the webinar, and then we send them a PDF file of the pitch deck. Because of course, most people have kids; they can't just make it to a 5 p.m. webinar on short notice. So most people, I think, just view the recording.
Can they make a commitment right there and say, "I want a piece of it," or how does it work with the process?
Yeah, that's a great question. Actually, our last webinar, we had like 100+ people. I was shocked by that on it. Maybe that's why it filled so quick. But so once the webinar ends, we give everyone, we set a date that's like a week in the future usually. So we tell everyone on Wednesday at noon, the offering will open. Yep. Your action items are to log in our portal, hit the subscribe button, and sign the legal documents. Once you do that, you secure your position, put your investment amount as well. Yeah. So it kind of creates a frenzy. We try to make it like Taylor Swift tickets, where instead of just saying, hey, whenever you guys feel like it, make a move. No, at this day and this time, that's when it opens. And I'll get people texting me that morning saying, hey, Mike, I'm trying to get my lunch break timed up with this. I don't know if I'm going to make it. You think I can get in? And I'm like, I don't know. I can't promise anything. But that's kind of the friends that we want around it.
I love it so much. I went to an American Invesco event years ago, back in 2004 or 5. And they had this complex in Florida. It was about 400 units around this lake, and they had 3 screens in the hotel room to Vegas, New York, Chicago. I was down in Florida at the live event. To get into this event, you had to show them your checkbook just to walk in. Wow. Right? And then they go there and they had all these, they had rent guarantees in place, right? They have, and you know how that game works, right? They had set aside some money to guarantee an inflated rent, which kind of boosted the valuation, which not so good. They sold the whole thing out, 400 units in like a couple of hours.
Wow.
And I'm like doing the math in my head going, holy crap, this is pretty cool. So I did something similar I had a 20 unit condo project. It was an apartment building. I was converted to condo. So I did all the paperwork on it, got the contractors in place, the drawings, everything all done. And I did a hotel event and did all with 30 units all within a couple of hours. It was
so it almost is this like an auction, essentially a live auction online? Is that what it is?
It was a live auction for American Invesco. In my case, I had a bunch of real estate students there and guests. So I just gave everybody a ticket and I just drew like 40 names, or no, is it 20 units? I forgot now. I'll call it 20 units, I think. I would do 40 tickets, 20 primaries and 20 alternates. 20 primaries, you guys got a chance to pick your condo, whatever's available, right? And if you couldn't qualify, the alternates would come in. So I covered in case they didn't qualify for their financing. But yeah, the whole thing sold out in 2 hours.
Wow.
Because I had 300 people there and 20 units. So it was easy.
When's your next event?
I'd rather come to yours. I don't do that anymore. But I love the idea of authentic scarcity, not fake scarcity. This is real because there are only so many units. You only have so many spots there. And it's so much, it's just more fun to me, I think, from a marketing perspective and deal flow and cash flow. It's great to have things taken care of versus the long game of trying to do them one at a time. So,
yeah, you can see through a lot of fake scarcity. I was part of a mastermind, and in that mastermind, I would always hear them pitch to new members. We have a limited amount of spots. Sign up now to get in the mastermind. I'm like, dude, there's unlimited spots here. Yeah. Everyone can see that.
It's so clear nowadays, and people have to realize that the Tin Men 80s tactics just don't work as well as they used to, and they shouldn't do it anyway because it's not honest. I just don't like it. So yeah,
the 1980s used car salesman kind of tactic. Yeah, always be closing.
Yeah, with Danny DeVito. It's an old movie, but I liked it. Yeah. All right, so you're looking for deals, and once you get the next, we have something coming up soon. A deal coming up soon?
Yeah, we have 2 that we're looking at right now that we might just package together as one investment. So, you invest and you're kind of investing in both projects.
Right.
Both right by the beach, both a block from the beach, actually, ocean views. So we're excited about that. But, we still have some due diligence to do before we lock it out.
And can people get like a waiting list for when you do have the contract in hand, or how's it work?
Yeah, really, if they just go to our website, takeoffcapital.com or my personal website, investormike.com. And right there, there's a form or a link, I should say, that says invest with me or something to that effect. Okay. You just click that link and it'll get you on the list.
You have a preference? Which one I put down below here?
Investormike.com.
Okay. Well, right below here, folks, go to investormike.com, right below the screen here, and check it out. And if you have the means and the desire to take a look at this stuff, get on Mike's list, because it sounds like he's got some great value in a very turbulent world. It's nice to have that steady asset of some real estate. So very good.
Appreciate it, Doug.
Any closing words of advice for people?
No, if you're in if you're in business, get on podcasts such as Doug's. It's always good to network with people like Doug. You're always gonna have an interesting conversation, and it's, I guess, good to get your name out there. So we're always trying to do more podcasts. So thank you so much for having me on.
You betcha. All right, that's it for the show today. Thanks, Mike. Appreciate you, folks. Go to what's the Mike Invest Mike.
Investor Mike.
Well, I'm looking at reading it down here. Oh yeah, investormike.com. Go to investormike.com. Sign up. Check it out. And if you didn't to get notes for the show, you can also download the show notes and subscribe it. You can like it. You can not like it. It's up to you. Appreciate your time today, Mike. Have a good one.
Thanks, Doug.